Carbon trading came about in response to the Kyoto Protocol, signed in Japan in 1997, aimed at slowing climate change. The protocol calls for 38 industrialized countries to reduce their greenhouse gas emissions. China, as the world's biggest emitter of greenhouse gases, is also betting on carbon trading as a key measure to cut its emissions.
If we view GHG emission space as one type of natural resources, it is very natural we should also let the market play a critical role in the allocation of GHG emission space.
Already, 7 regional carbon markets are up and running in 4 municipalities, 1 city, and 2 provinces. China's National Development and Reform Commission, or NDRC, plans to launch the national market in 2017.
Carbon trading is to ask the heavy emitters to pay for the cost of their emissions. But this market should have the characteristic of resilience and flexibility. Because of the market tool of control, companies will pay more attention to energy saving and try their best to promote self-innovation to effectively control carbon emissions.
Another name for carbon emissions trading is carbon trade. A CAB means the maximum pollution output at a set level that can provide each entity and carbon currency that can be traded. China's NDRC determines the CAB based on energy reduction target and on government allowances for pollution permitted. The question then is, can the trading be transparent? Professor Duan says there are 3 aspects needed to ensure the transparency of the trading. First is that the government requires exchanges to publish transaction information, including trade volume and price. Secondly, a newly introduced third-party verification system would check on the yearly report of each entity's emissions. Meanwhile, the allocation approach will be published, letting the entity calculate the free allowance it received from the government.
If they think the government has made some mistake in the calculation process, they can go to the government to negotiate with them, to debate with them.
The China-Beijing Environment Exchange in just 2 years had traded more than 5 million tons of carbon dioxide with a volume of about 240 million yuan or less than $40 million. Many experts believe those numbers will only grow as the trading continues. Carbon trading reflects a win-win concept. The trading is intended to reduce greenhouse gas emissions while offering economic benefits. However, critics say that without a cap on emissions, carbon trading will not achieve its initial goal to reduce greenhouse gases. So, to find a compromise between profit, quality, and ecological concerns, it appears there's still a long way to go. Bang Tongxuan, CCTV, Beijing.